Hi there, I'm Richard Hill, the host of Ecommerce One. Welcome to episode 189. Yep, 189 weeks in. 189 episodes, and this one is an absolute cracker. Now, in this episode, I speak with Clare Haskins, Head of Revenue Operations at Ecommpay. With a career spanning business development, change management, and over 10 years in payments and finance, we had to get Clare on the show. Now, when it comes to payments, most merchants don't focus enough on the benefits to your customers on having a full suite on offer, and it's usually fairly easy to fix. So in this episode, myself and Clare cover the different types of alternative payment methods that are gaining popularity, such as e-wallets, cryptocurrency, and buy now and pay later. We chat all things e-wallets, Apple Pay, Google Wallet, cryptocurrency adoption, and how realistic is widespread adoption for everyday transactions. The potential impact on buy now, pay later, and what that's having on consumer spending habits. And we talk about next steps for those merchants that are maybe looking to integrate alternative payment methods very effectively. And of course, so much more on this one. If you enjoy this episode, hit the subscribe or follow button wherever you are listening to this episode. Now, let's head over to this fantastic episode. Hi, Clare. How are you doing?
I'm great, thank you. How are you?
I'm really good, really good. Welcome to the Ecommerce One podcast.
Thank you very much. Thank you for having me.
No problem at all. Well, I think it'd be great for you to kick off and introduce yourself to our listeners and tell us how you got into the world of e-commerce and payments.
E-commerce and payments, indeed. So hello, everyone. My name's Clare Haskins. I am currently working for Ecommpay, heading up revenue operations, which is my first dedicated foray into e-commerce. But I've been working in acquiring and the wider business since 2013, formerly for WorldPay, and then a long stint for Evo Payments, where I was heavily involved in the mergers and acquisitions piece. So worked on both the physical side of the business as well as kind of the more online. And fell into that, I have to be honest. A director that I'd been working with in telco moved across into WorldPay, and as you do, came back for the team. So that was really my first foray.
Nice. So I've been doing this a little while, and I think payments, going back 20 plus years now, I think, or maybe 25 years ago, I remember signing up for my one payment provider back in the day, and there was one option, which was, just a standard credit card option. I guess, there's a bit more to it than that now. But I think, obviously, those stores that are doing well have a lot of alternatives. There's a lot of alternatives available. I think it'd be good to kick off to give us a bit of an overview of the sort of landscape now. There's a lot more than just taking one credit card, obviously, or one type of payment. There's a lot of alternative payment methods now. Maybe step us through sort of the ones that are on the rise at the moment.
Yeah, happy to. So it's an interesting topic, right? Alternative payment methods, APMs, one of those terms. It means lots of different things really to lots of different people, partly because it's such a broad church of services. And so really APMs for us includes things like digital wallets. So probably best known to people as Apple Pay, Google Pay, others are available, where you load card details typically or payment details into a wallet, and then you are not required to have to provide those those individual card details on a regular basis. So really driving convenience. It includes crypto, which is a bit of a hot topic, or cryptocurrency, because again, it's a little bit Marmite in terms of people's perspectives on crypto, understanding it to start with, but also whether they like it or see a future for it. So a digital currency that isn't tied to financial institutions. Then buy now, pay later, or installments, BNPL sometimes is the acronym people are using, where you have the opportunity to delay the payment of goods or services that you're purchasing by splitting it into chunks, essentially, to be able to pay. And then to bank transfer payments. So the latest of which is open banking. The ability to do account-to-account payments to do account-to-account payments in a rapid and secure manner. And then the very last one, which we Ecommpay include in the APM portfolio, is what I would call local payment methods. So great examples of this are Blick in Poland and Girocard in Germany, and even Pix out in Brazil, where there are local payment methods that people are using that really kind of enable a wider addressable market for merchants.
Yeah, it's a whole array now, isn't it? And each one of those, I'm thinking, we could talk about that one, and we will get to them all. But I think, ultimately, there's such a wide array of options now, which is great. Obviously, different people, different generations, different countries have all got a preference or two. I think about, I just think about my own sort of buying habits online. Then I think about my children who are sort of older teenagers. Everything is just in the wallets. The digital wallets is literally. I sort of said the other day we were out. I said, have you got your card with you? And they go like, well, I haven't got my card with me. They're looking at me like I'm an alien sort of thing. It's like, I haven't got my physical card with me. And I'm thinking, whereas I'm the opposite. If I haven't got my card, my little wallet, it's just a little, I just use these little, this is the wallet for me.
Yeah.
But obviously now, and for many, many years, the digital wallets. What would you say, why are consumers really gravitating to some of these alternative payment providers as opposed to traditionally, not too many years ago, it was more about a physical credit card? Why are these gaining popularity, would you say?
So I think it's the evolution that you just started to describe. So there are really good reasons, and I've worked in payments as we were just chatting about offline for, over a decade now. So I'm a massive advocate of paying digitally. So there are really good reasons why people want to pay on cards or digitally rather than by cash. So security, available funds to spend. So there's a kind of a progression from cash to card in the first instance.
Yeah.
Then you've got some sort of strategy and environmental factors. So a number of organizations and countries are running strategies to try and move people to digital money for the visibility and the controls. So Poland had a fiscalization project back in 2019. Ireland has a cashless ambition for 2025. And Saudi has a 2030 vision, so kind of revolutionizing the country, which includes, really strong financial pillars and the introduction of open banking. So,
yeah,
they want 70% of their transactions to be cashless by 2030. So then there's this sort of macro context. And then finally, exactly what you described, which is pure convenience. COVID really helped with that. We were all out for our daily walks. We were trying not to take lots of things with us, not to touch everything. And so being able to, cement a number of different payment methods into a wallet and only be able to carry one element, a device, a phone, be it what it is, I think that convenience factor coupled with the security and everything else just really took over. So you sort of come through the generations or the experiences of those transitions. And exactly, I have a 17-year-old. It never occurs to him that he needs to take anything other than his phone with him when he's going out to pay. Yeah,
it's just so simple, isn't it, for them? They don't know any other really. A lot of people, a lot of certain ages and whatnot. I'm very much still in my mind old school with cash. But it's difficult to spend it, isn't it? It's very difficult. Where is that going to go? Where is the cash? There's various arguments and discussions I've seen online. That. I probably shouldn't be asking you this, but, for every, obviously, pound that gets spent online, a percentage of that money is getting swallowed up, should we say, in fees, various different fees for various things. One payment here, one payment there, a pound turns into, before we know it, it's getting reduced. It's quite an interesting conundrum, really. Obviously, we want that convenience, but I just fear that a world with no cash. I don't know. I don't like it.
I'm going to take the opposite position if I can. I'm a massive cash advocate. I hear friends particularly talk about cash, and I have to, bite my lip and not start a political debate, because of course they're entitled to their view as well. But I do think, the simplicity, the immediate availability. People worry about, let's call it, budget management in a cashless environment, but there are loads of fantastic apps that can help you to control your spending or to set limits or to provide that mechanism. I appreciate you can drop your phone out of your pocket and you've got a problem, but you can instantly cancel it. You drop £20 out of your pocket and that's gone.
I like that. Yeah. You're not getting that back, are you? Probably.
Definitely not if the children find it. No, that's fine. But you've always then got to have cash available, and the security as a merchant. So having cash on premises has a cost to it. Taking cash to the bank, whether that be coin or notes, has a cost to it. And I think some of those costs are slightly ignored when it comes to comparing the price of taking a credit card transaction, for example, against taking a cash transaction. I do appreciate the impacts on the visibility and the transparency of what you're reporting for tax purposes, but from a business controls perspective and ensuring that you're not going to find your till float is completely out at the end of the day because somebody made a genuine but incorrect mathematical calculation when they were putting things into the till. All of those things help. And then
change or whatever,
service, et cetera. So there's a whole host of really good reasons why cash is moving out, and you're seeing that everywhere you go, certainly online. The UK doesn't have a cash on delivery service, which a lot of the European countries still do. But in the physical world, so many places now you go in and it says, we only accept cards, or you can only go through this queue if you've got card. All about
the vast majority of shops now are or a lot of them are not taking cash, are they? And that's only going to increase. So having alternative options in those stores as well as in e-commerce on the actual, obviously e-commerce back end is one thing, but then tying that into the actual physical stores. So, the options there are increasing. Obviously, typically you go to a shop and pay for coffee, you're paying with a wallet or a debit credit card. How long is it before you walk into a store and you're able to somehow pay in store with crypto? Is that a thing?
I think eventually, yes. So we're already starting to see it come. Crypto really is just the next wave of digital payments. There's still some speculation about it. There's still some elements that are being worked through as people try to grapple with what does it mean and how do I track it and how does it compare to what we've known historically. But I think as it becomes more central, as government-backed crypto, so fiat, or central bank-backed crypto, so CBDCs, central bank digital currencies come in, I think you'll see much more mainstream acceptance of them. And then you've got, name dropping them slightly, but you've got people like Coinbase who are offering services around crypto that absolutely map to the same infrastructure patterns as Visa. And so that's really where not only you'll start to see crypto being available to pay with in those kind of mainstream environments, but also some of the things that need to be addressed in order for it to be possible.
Because I think that maybe 18 months, 2 years ago, there was a lot of talk about we'll add crypto to the options. Every e-com store will take crypto, and I went to a lot of the big, should we say the platforms? I won't name drop any on this podcast, but a lot of the platforms, the e-commerce platforms, not the payment platforms. Saying, well, everyone will be doing crypto, taking crypto, will be a standard thing, but that adoption doesn't seem to have really happened in the last 18 months or so, but that's more because of the technology side of things, I think. Was that what you're saying?
Technology, yes, but also some of the kind of the operational frameworks that are required. How do you assess where it, its pedigree, so to speak, where it came from? We're very familiar with the processes that are required around bank transfers, card payments, etc. It's really just kind of familiarising ourselves with these new ways and then establishing them. But these things do take time. Contactless didn't happen overnight. If you look back in history, I remember having a conversation with my mum. I'd started working in the industry, and she was convinced Marks and Spencer's were zapping her card as she walked past the door. So, there's lots of things to overcome, and people's understanding or lack of understanding, and the education that we need to deliver to the market is part of the responsibility I think we have as an industry. And it always surprises me when I have conversations with people who don't spend all their life thinking about this, because we just inherently spend so much time thinking about how it works, why it works that way, what's important, what we need to think about as a business, how it can help people. And so, I think the journey will come just over a slightly longer trajectory than the 18 months that you've described.
So out of all the payment options we've sort of covered so far, which one is the one that's sort of getting the fastest growth at the moment? We're talking about, buy now, pay later. We're talking about crypto. We're talking about, obviously, wallets and a couple of others. Is there one at the moment that, if our listeners, are maybe not, more than likely not explored the full extent of what is available to them to offer to their customers, what is one payment option at the moment that's maybe a lot of people you're seeing quite a rise, but then maybe quite a lot of merchants aren't maybe aware that they really should take that or offer that to their customers?
Yeah. You mentioned buy now, pay later. It was possibly a contender, but we're now seeing a decline and a withdrawal of services from the market around buy now, pay later. So I think some of the challenges with it have started to bear fruit. So essentially, it's a mini loan and or a credit line, and you're extending a credit line to somebody in the moment. So that's quite an important consideration. But therefore, my punt, so to speak, on which one is digital wallets. It's the simplicity of tokenizing payments into a single click or limited set of clicks transaction that people really embrace. It's instant, it's immediately available, it is everything that they want to be able to execute without having to remember CVV or 3-digit card codes or any of that kind of additional information. So, and they feel comfortable with the technology because we've all grown up now, certainly over the last 20, 30 years with a mobile phone in our hand. It's kind of got much more sophisticated, but that's become the norm. So it's a very comfortable and convenient way for people to adopt. So if a merchant's going to do anything, then it needs to be around enabling the mainstream wallets, particularly in Western Europe. If they're looking at other markets, then wallets that are relevant to those. Asia, for example, WeChat, Alipay, much, much more prevalent. But here, Apple Pay, Google Pay, PayPal, those are the ones that are really driving the revolution or the change for simplicity of payment.
Yeah. I see, like when I'm like going back to sort of going into stores, I see people paying, they've got their wallets hooked up to their ring. You just see them tap their ring. This is quite amusing when I see it quite a lot. These different sort of fitness rings that have got tied in payments and things like that. I did try one a while ago. It wasn't actually, it was more of a fitness ring, and I actually ditched it personally. It was just too connected for me. Just always, obviously you're always fairly connected with your phone anyway. But then obviously seeing a lot of people just tap their ring, that's quite. Wonder where else it will go. Where else it'll go with. Is there some other sort of AI tech that's coming down the line where you'll just sort of almost blink at a machine that'll take the payment, scan your retina. I guess we're not far off that now, are we? In that, your phone opens. You triple blink or something, and then a payment will get taken.
I definitely think that those sorts of technology are no longer kind of the fiction of movies. They're definitely the reality of what's coming. I think that facial recognition, biometrics, all of that has just helped people to simplify their payment journey, but feel that there's security for them and control. So I think, voice controls, etc. And I also believe that there's a whole industry who are very dedicated to people who have disabilities. So people who are sight impaired or hearing impaired or have some level of dexterity limitation that means that they need to operate in a different way. And while they're solving for those problems, they will come across something that just, makes Claire's life easier and suddenly that will be mainstream. I'm kind of with you. We have a fantastic merchant. Again, I won't name them, but we have a fantastic merchant who is delivering wearables for payment. So rings, necklaces, etc. And the technology is fantastic. And if that simplifies, as you said, your gym visit, and you no longer take your mobile device with you, the connected watches were there a long time ago for being able to even leave your mobile phone behind. So I think there's lots of those things happening, and people will use them in part. So not all of every day, but parts of every day. And for certain circumstances, picking up your coffee on the way back or whatever it is, people will find naturally the use cases and the experiences and the scenarios that make sense for them. So I think we've got a lot more to see in technology and the way it delivers. I've joked with the children historically about wanting to have them chipped so that I can track them from a SIM perspective. I've got a teenager who's lost more mobile phones than I can count, but I think there's all sorts of scenarios, but I'm not suggesting that we all get embedded SIMs certainly at this point in time.
It is interesting, isn't it? Well, I'm probably going to have you back on in 2 years, and it'll be like, kids have been chipped. Oh yeah, it's going to be some new tech that's not that. It doesn't seem 5 minutes ago we were watching some of these. Was it Minority Report, the film with Tom Cruise, and that's all semi-reality. Some of it, not all of it, but it's crazy. Now, obviously, we touched on buy now, pay later, and I think that's a good topic to talk about. I think it's a given. I think for saying that you should take it, you should be able to take it. But I think you suggested there's a bit of a decline on that at the moment in terms of people using it. What's maybe driving that? So it's two-pronged question really. What's driving that decline, but also what's maybe the industry doing to ensure people aren't getting sort of further in too much debt?
So I think second half of your question first, I think that's been the fundamental problem. So when buy now, pay later was launched as a concept, I personally was quite cautious of it. And the reason being that I couldn't, I appreciate credit lines and loans are really important to people. And in fact, they're very often a lifeline. And therefore I felt the urgency and the immediacy of the decision. So I get to the till with whatever it is, my pair of trainers, and somebody says to me, do you want to pay for them now or do you want to put it onto a buy now, pay later scheme? And the temptation to put it onto a buy now, pay later scheme when possibly I didn't need to, I think is part of the reasons why people originally adopted buy now, pay later. And the whole process for assessing whether I'm sufficiently capable of repayment, willing to honour the mini repayment plan, because it's always over a short period officially, buy now, pay later, no more than 6 payments. All of that is, it was too easy not to take the credit and to kind of create that scenario. But the regulation hasn't followed it. So it's really difficult to effectively assess people and to be able to be sure that you're doing the right thing by them and by the industry. And then, of course, we've gone into this, global, really, cost of living crisis, and people have been forced into much, much more problematic financial positions. And then those enablers have become even more poignant because people are using buy now, pay later, for example, for their grocery shop, perhaps where they wouldn't have wanted or needed to historically. So all of those have kind of created this huge snowball. in fact, I have some stats where the debt over the last 3 years has risen. It's actually doubled in the last 12 months on buy now, pay later specifically, but it's now at 76%. That came from Citizens Advice. But I think the big players, so Apple are just withdrawing their buy now, pay later solution, Apple Pay Pay Later, or Apple Pay Later. PayPal have Pay in 3, Pay in 4. There are a number of big players who are starting to take themselves out of this market and then perhaps reconsider the concept in a more formalised instalments basis, where it is a much more considered loan decision, and therefore all of the considerations for affordability, repayment, debt management are all much better regulated and all much better considered. So we're really seeing that trend. Klarna withdrew their product for a while, and you're really seeing a rationalisation of the industry, because at one point it was a little bit of a boom sector.
Yeah,
there are a whole host of buy now, pay later providers.
It's a bit of a tricky one, isn't it? I think, because
now you might be looking for an SEO boost, a down-to-earth digital PR campaign to share your story, or maybe just some straightforward technical help to amp up your performance. Now that's where Ecom Now comes in, a partner that's all about making things easier for your online store. Our services cover everything from creating professional content for your e-commerce categories to refining your product descriptions. Now, whether you're just starting out or have been in it for a while, we're here to deliver real, impactful results that add to your bottom line without unnecessary commitments. You can order one-off or multiple projects with a quick turnaround. Simply choose what you need.
It's a tricky one, because ultimately, you want to offer the options as a merchant to the people that are buying, but also it's definitely becoming more and more sort of commonplace that, there's a buy now, pay later. Oh, it's just £20 a month. It's nothing. But obviously, when you've done that 20 times on various things, a click of a button, it's very, very easy. It goes through. That then is quite a balance, isn't it, for the industry? How to get that right? Quite a tricky one. I think we'll have to sort of come back to that in a year and see where the industry goes with that. But like you say, a lot of people are changing it, withdrawing from it. I think when you look in, it's just fairly commonplace to go through even, the high street, and you see, a children's item, and it's, a pair of trainers for £80, or it's £14 a month for 6 months. It's like, that's targeting people that maybe don't really have a concept of the financial side of things, managing their money. It's a tricky balance, isn't it? Trying to get that right. Very tricky.
Absolutely, and also being ethically appropriate with people who are vulnerable to those things. In some ways, it's a modern version of the old catalogues. The 1980s, flick through Freeman's or whoever your catalogue of choice was, and then make a whole set of purchases from home that you would pay for over a period of time. But even that had a credit limit per customer. So there's it's an interesting topic, and I think that it's both encouraging. It is encouraging to see the big players starting to take a quite serious review, because without the regulation coming, they've realised for themselves that this needs to be more controlled. And it may very well resurge or re-emerge, but I think that the fact that they're taking it away until they can resolve some of the challenges for themselves and for others is really important, and it probably then will set the trend.
So obviously we've covered a lot of sort of payment options there, some of the newer ones, some of the ones that people will be thinking of doing, some of the ones that they're already doing. Most people, in theory, should be doing everything we've spoken about-ish. Crypto is probably one that I think quite a few people will be maybe not quite there yet with. But obviously with the rise of these new payment methods, what security concerns should consumers and businesses be aware of, and how can they sort of potentially mitigate that risk?
So it's a great question, because it's the constant challenge. security concerns do span a spectrum. So, there's we were talking earlier about having wallets on your phone. You lose your phone, you've lost your wallet. Now, obviously, you have remote control to be able to terminate or stop access, and certainly the biometrics limit the access to be able to make payments in the interim. But that risk exists, exactly as having cash in your pocket. The risk existed of dropping it in the street and being left without historically. Because of all of that, social engineering, which is also kind of a physical threat, is huge. We all get emails every day, or Facebook posts saying, your superstar name is the name of your cat and your mother's maiden name. Post it here for me to see. And so all of that kind of does create vulnerability because humans are exactly that. They're vulnerable and they want to interact with each other by nature, and therefore they kind of tumble accidentally into sharing those details or not thinking about how they need to hold them securely. From the merchant side, though, there are obviously regulations and protocols that they need to follow. So any digital storage of data has to be protected in a particular manner. That includes any sensitive data. So all of the data protection policies that came out beginning of 2018, I think, from memory, have really kind of revolutionized how data is stored, how long it can be stored for, what needs to be done. And there's secure data storage, yes, of course, but then things like cryptography and authentication for access. But there are some really great documents and guidelines created by Open Source Foundation and mobile application security and mobile application testing. So those are the sorts of things that merchants should be looking for as a guide. And of course, you can always engage professional e-commerce agencies who are really on top of that detail to help with that development. From crypto perspective, I think it links back to what we've already said, which is that at the moment it's been treated hugely with caution. And therefore, a lot of checks and balances are in place. As we become more comfortable and more familiar, we will feel like those have started to ease off. But what will have actually happened is we'll have got better in the background at understanding what the risks and what the risk is and what the policies need to be in order to make that framework operate. And then I think the last one from my perspective is transaction monitoring. We know in the industry that this happens all of the time. Consumers have an awareness because occasionally they get a call from their bank when a transaction is considered to be suspicious or curious. But actually, transaction monitoring is happening on every single transaction permanently with a whole host of really intelligent AI. So working with a partner or a specialist provider who can really help with that transaction monitoring and risk assessment in the background is critical, really, to the health of your business and the payments that you're accepting. I would definitely point people to people who are winning awards for risk controls because they're the people who are thinking about this kind of technology and developing it.
Yeah, it's changing, isn't it? I think, like I said, when I had e-com stores, which is sort of 15 years ago, you'd have one, I'd have I won't mention names on this podcast, but, you'd have one partnership with one provider, and that would take the MasterCards, the credit cards, and the debit cards. But now you've got, maybe, who knows, 6, 7, 8 options potentially. American Express is a whole other conversation. A lot of merchants not taking American Express. I think I read something the other day that it's like, you maybe correct me on this, but like 1.5% bump or more than that, I think. But if you're doing £10 million a year, I think it's more than that actually. Just adding these obviously different options in, but obviously the security concerns for each potential option. You've just got to be making sure you're working with a partner that has got those options covered. I think it's becoming more and more. It's just like every other week there seems to be something on the telly about some challenge with, people getting how can we put it, ripped off. with various sort of online scams. So not necessarily, debit, cards through the internet, but I think it's becoming more mainstream. The sort of the fact that you do have to be careful, with what you're doing and work with reputable companies. That's where obviously you guys come in, for merchants and helping merchants. I guess. Traditional banks, going back to sort of, when I was very much in the trenches and had my stores and warehouse and everything, and, it was working with a traditional bank, the high street in effect, or connected to the high street, but now we've got all these different options. What are the sort of traditional banks doing to compete? Because their rates must be so sort of out there that they must be struggling.
So I've had the opportunity to work quite closely with a number of banks, but I've never worked for one, just as my caveat to answering this question. So I think the banks are really having to look at everything that they've known historically and how they can maintain relevance in the new world. So they are in a position where their infrastructure is very outdated. And they're also in a world where they were the sole custodians of people's payments and data for a long time. So they had a set of rules that they operated with between themselves and didn't have to consider other parties. And they're now being forced to be much more ultra competitive, both in terms of flexibility for interoperability, but also in terms of commercial flexibility. And so they're rethinking their strategies. They're trying to understand how they can transfer the ownership of data back to the individual rather than them considering it to be their asset. They're having to think really heavily about their infrastructure, and that has a huge cost to them. The costs of delivering open banking for the UK market went into millions for the CMA9, the original 9 members of the Competitive Market Authority. So they're being forced by regulation to make some of these investments, but they're seeing the opportunity to partner, to bring in specialists who can deliver services and they can white label them so that they can enable services for customers actually at relatively lower cost. They're thinking about how they need to revise their policies and their procedures so that they can be more agile, because that's very much kind of the mindset of the new payments world. But they're fundamentally having to reinvent themselves, and that is a huge challenge for them culturally, politically, financially. And they're not less cost competitive. That's a slightly badly structured sentence, but they're not. It's not that they're not cost competitive. But they're also not making as much money as people perceive from some of the services that they're being forced to invest in. Open banking is a case in point. Open finance starts to open a different conversation for them, but open banking was a regulated instruction, and there was huge cost to the banks and huge change to adapt to with relatively little financial income. So it's a huge change curve for them, but they are having to move to it because of all of the other factors that are pushing on the outside of that.
I guess it's only good for the merchants, isn't it? And the consumers, I would say, that ultimately, they maybe had a good run for a while, and now they, like a lot of industries, new people have come in, made things a lot more competitive, from a merchant's perspective. Ultimately you're paying a fee, a percentage, a fixed rate, usually a percentage. Those percentages have been driven down by different alternative options, different providers. That potentially then is who knows, whatever it may be, a 1% extra on the bottom line, or whatever that number is, which could then, that merchant can then decide whether it's it's a little bit extra for the merchant, or obviously you can pass that on. Helps you to develop a better website, etc., etc. It's only good, I think. So those guys then that are listening in and thinking, do you know what, I really need to adapt and add. They're thinking, do you know what, we're not doing this one, and we're not doing this one. We haven't got this option on the website. We haven't got this. What's sort of a bit of a roadmap or an audit or a next steps to people that are listening that are maybe thinking, do you know what, we really do need to adapt, and integrate some of these alternative options. What would you say to those guys?
So I think I would try and focus on three things. MasterCard and Visa are and Amex, to be fair to them, are in the process of launching Click to Pay. So this is around central storage of details that allow you to universally tokenize payments. And that's really enabling and very secure, and that will be a huge contribution. So you need to be on the mass market changes. That's the first one, and Click to Pay happens to be the current one that's leading that.
So that'll give your customers literally one click pay rather than filling in details, which is obviously a barrier. Yeah,
correct. And rather than it having to be, so we've always had card on file where you can, choose as a regular customer of merchant X to record and save your details with them. This allows you to do that with much more flexibility, and the information isn't stored locally. It's stored as a token that they can then communicate with people like Visa and MasterCard, who are leading the field in terms of the level of security and control. So I think that's definitely my first one. Click to Pay should be a no-brainer for everyone. The second then is to think about the markets that you operate in, and if there are any dominant central bank backed payment methods. I mentioned PIX in an earlier conversation, earlier part of the conversation.
Yeah.
PIX in Brazil. Blick in Poland. Really think about if you want to be in a market where a particular way of paying is either part of the central bank or government strategy or is really intrinsic to the way that the market operates, then that's got to be there. So it's about research and matching. And then I think the third one, looking ahead, is thinking about, will crypto be relevant for my customers in the future? So as it stabilizes and as these central bank digital currencies, the CBDCs, come through, is this going to be relevant to my demographic or my target demographic? And if it is, then it's definitely something to start preparing for. If it really isn't, then I think that's legitimate assessment and rejection, or at least delay for now. So being able to implement those, consider the markets, do the research, follow the thinking, follow the conversations like this, and really to kind of be both educated but open-minded to what's necessary. You were talking a moment ago about the cost of all of these things for everyone. There is a cost. There's a cost of delivery. There's a cost of execution. There is a cost for everything that takes place, but there's also an opportunity. So being able to take additional payment methods means that you broaden your addressable market. You make someone more compelled to purchase in the moment than they might have been. You extend their spontaneous purchasing. You make them more comfortable with the payment on your website than they may otherwise have been. So you're really enhancing the total sales pot available to you, as well as carrying some costs for being able to deliver those. So I guess that's my
huge one, isn't it? It is a huge one, though, isn't it? I think, still it amazes me when I go to a store and there's like one or two or three options, as opposed to, there's no buy now, pay later. My Amex doesn't work. You're like, you're joking. The amount of, I think the majority of our listeners are, multi-million-pound stores, trying to smash through these 10, 20, 50 million pound barriers. Even some of these guys not having the options there, and really the cost to implement is, there's something, but really the opportunity that is missed far outweighs these costs. It's staggering that they're chasing, acquisition with paid ads, which is great, but really simple, looking at that tech stack, looking at the providers of that, not just payments, the simple things that really can have such an impact. So
my watchword, in all candidness, is convenience. If it's convenient, and that covers obviously simplicity and ease of use, and confidence in the security. But if it's convenient, then I'll do it. And I'm dreadful personally now if I can't do it in a few clicks, and if I've got to go and fetch the card to look up the CVV and all of those details. I start to get buyer's remorse before I've even purchased.
Yeah. Totally, you're gone. You've forgotten that firm, whatever they were called. Let alone the fact that you're just next, aren't you? Yeah. Obviously, a lot of great takeaways there. Stores that are listening in, what are you doing exactly, with your options? But I think let's crystal ball time for a minute, Claire. We're sat here in 12 months' time. I think you've touched on quite a few things there, but what do you see being the sort of big changes that are coming down the line in the next 12 months that our listeners really should get ahead of? I think you've maybe covered it to some degree, but if I had to press you for maybe two things that, in 2 years, if these progressive merchants that are trying to push through these big, 10, 20, 50 million plus barriers around payments, what should they be aware of? What should they be really, really sort of making sure that they've got on their roadmap?
I think I'm going to sound, I think I'm going to repeat what I've said, and I'm going to extend it to three, though, if I may. So from a payments capability perspective, the tokenization, so big click to pay or wallets, the tokenization of payments is one. The second is have an eye on what is coming from crypto, because that may or may not be relevant to your business. And then the third is mobile interface operability. So if you can't do it on a phone, if I can't do it running through the airport, if I can't sit on the tube for a few minutes flicking through your website and decide to make a purchase and get that closed before I get to my next stop, then you're going to lose me as a buyer. And so it's the things that optimize and create that perfect purchasing environment that will really drive, continue to drive. They're here already, but really continue to drive adoption, growth of purchasing, and less abandonment of cart.
I think that's perfect timing. I think ultimately, we're trying to improve that customer value, the customer value optimization, getting to make that first purchase and have such an amazing experience that they then come back and they buy again and again. That's sort of in its simplest terms. Well, Claire, it's been an absolute pleasure having you on the show. I like to end every episode with a book recommendation. Do you have a book to recommend to our listeners?
Yes, I do. And I want to demonstrate that I do think about more than payments from time to time. So these are non-financial services recommendations. So I'm a huge believer in the natural restoration of land, so the rewilding or nature restoration. So my recommendation is Ben McDonald's Cornerstones. I think the reintroduction of key species is a really interesting topic, and one that is definitely worth a cup of coffee from time to time to invest in.
Well, that sounds fascinating. We'll link that up on the show notes. So everybody listening now, there'll be a link on the eCommerce1/podcast episode. So for those that want to find out more about you, Claire, more about Ecommpay, what's the best way to do that?
So we'd love to hear from you at sales@ecommpay.com, or you can reach out to me personally. LinkedIn, of course, you'll find me at Clare Haskins. I'm possibly, you can see my spelling here on screen. But yeah, look forward to connecting with people.
Yes, fantastic. Well, thanks for coming on the show. I think we'll do a regroup in 12 months, see how some of the adoption of some of these options that we've been talking about. And I'll see you soon. Thank you very much.
Nice to meet you. Bye, Richard.
If you enjoyed this episode, hit the subscribe or follow button wherever you are listening to this podcast, so you're always the first to know when a new episode is released. Have a fantastic day, and I'll see you on the next one.